We wonder what the ultimate economic impact of these tariffs actually will be. Clearly, the market is freaked out today. Is that justified?
The market's worried. It's understandable because the tariffs are significant, and in some ways they need to be, Kailey. If the president is serious about reindustrializing the U.S. manufacturing base, then tariffs are a very important tool that will be used to do that. The markets also, I think, were not believing the president was serious with these tariffs. So today might just reflect the fact that for much, I think, of this year, there was thoughts that they would actually never be implemented or be watered down. So I think today was really a reality check for many investors.
No room left was the line today, Joe. At least until tomorrow, right? These are going to take effect, the president says. But couldn't you envision a world in which certain conditions are met? Maybe Canada, Mexico match tariffs against China, as Scott Bessent suggested on Bloomberg on Friday. And then he could take credit for a 1,000-point rally come Wednesday afternoon. Does that sound like a possibility?
It sounds very much like a possibility. The president, he did write a best-selling book, Art of the Deal. He does know how to negotiate. And I imagine at some point there will be a negotiation and these tariffs perhaps will be significantly lower. Remember, on the campaign trail, he talked about 10 to 20% tariffs. So I see the prospects or the possibility, as you alluded to, Secretary Bessent had said, in lowering tariffs to actually have a deal at some point.
Well, and of course, tomorrow is just one deadline, Joe. He's also announced a laundry list of what he says will be implemented on April 2nd, from agricultural products to autos to reciprocal tariffs on other countries. And it does raise a question of the timeline here. Earlier today, we spoke with Liz Pancotti of the Groundwork Collaborative about the potential inflationary impact of Trump's proposed tariffs and specifically how the timeline affects it. This is what she said.
If you expected a one-time increase in prices, or if that was your goal, you might implement all the tariffs all at once in a very clear fashion on a very clear set of goods. Instead, we're getting, delays on this, layers on this, changing in decisions at the last minute. I don't see how this is a one-time price increase, especially with where consumer and business sentiment is. I think this is likely to spiral, and we're likely to see downstream effects for months to come as the Trump administration continues to play games with the implementation of these policies.
And Joe, given you've been on this program with that one-time price increase notion before, how does the timeline influence that?
Well, I mean, even on the one price adjustment, I believe it may have been Secretary Bessent at one point said that there was a possibility that if it was a 1 point, it could be phased in. Certainly, I know that was talked about. So I'm not really sure whether it's, there's really two issues. One is, are you negotiating on a bilateral or reciprocal basis, which the president is doing, or are you doing something more uniform with different tariff tiers, which is what I think I read he suggested more when he was campaigning. Ultimately, it doesn't matter. I mean, in the sense that there needs to be some minimal level of tariffs if you want to reindustrialize to attract capital back to the U.S. Remember, Kailey, at the same time, you're cutting taxes, keeping energy costs low, and putting business-friendly regulation in place. The fact that it might seem to some that it's disjointed actually could be a positive in that it's a gradual increase. It's not a big one-off 25% adjustment. Moreover, it seems to me if you're going along different products and you're doing it more bespoke, there's also an opportunity for negotiation. But as I said at the outset, this is still very early stages. I expect tariffs will be used effectively, but the rates we're seeing now aren't necessarily the rates that we're going to have in perpetuity, because I do think there'll be some sort of deal. What it looks like, hard to say, but I do think there'll be a deal.
What's the president need to say about this tomorrow night? Joe, so much of this has to do with perception. We saw a poll from CBS YouGov over the weekend. 80% of adults think Trump should focus on the economy and inflation. And I realize there's a lot of overlap here. And he did, of course, campaign on tariffs as his favorite word in the dictionary. But if rising prices is the worry here, how does the president straddle that in his address to a joint session and to the nation tomorrow night?
So on the tariffs, again, the tariffs are a price level adjustment. The inflation that we had over the past several years was excessive spending that the Fed monetized. We saw that in money and credit growth, which exploded to the upside. So tariffs are a price level adjustment, which, Joe, can be offset if oil prices decline. In fact, oil is a much bigger weight in the economy than tariffs. So even if you're looking at a higher price level adjustment on tariffs, if oil prices move lower, that will provide an offset. And in fact, if you look at where oil was in January, we were $80 a barrel. This afternoon, we were under 70. So that's important. But Trump does have an economic record that he could show to people. The Trump 1.0 is pretty successful. And tomorrow, I think he'll talk about how he needs to really try to continue the policies had in the first administration by having rising middle-class wages. Real household median income rose about $7,000 in the first 3 Trump years, which was basically more than what had been flat income growth over the prior 16. That's, to me, is the message he's likely to highlight, and how he's really for the common folk and, the forgotten person, so to speak, that has basically had their job offshore and outsourced to China and elsewhere.